Hello and welcome back to the show. So I am super excited to have my guest Axel here on the show today because he is an expert on real estate investing, building passive income, and building a legacy towards your retirement. But also, he is an expert in investing in international countries, in other countries outside of just the United States. So there's going to be a lot to talk about today, and we're going to be digging into some of these topics and also some questions that I think everybody here listening will want to know as well. So without further ado, I want to bring on my guest, Axel. Axel, welcome to the show.
Yeah, hi Kobe. Thanks for having me.
Yeah, no, absolutely. I'm excited to have you here. So before we dig on in, would you mind just kind of giving us a little bit of background about yourself, about how you got started in real estate? What was the bug that really kind of got you started to start investing and, be on your way to, who you are today?
Yeah, I don't know if I would call it a bug. It was more initially out of circumstance. Um, I was in the Air Force and I had applied for an exchange position with the US Air Force. So I was in the German Air Force and to exchange my job with a US Air Force officer. So we, kind of switched countries, so to speak. And did the application, was basically told, no, we picked somebody else. And the house that we had at the time, we decided, okay, well, if we're not going to the United States, then we're just going to renovate that house. While we were almost completely done with that renovation, I got suddenly a call to go to the boss. I was wondering, what did I do wrong? But it wasn't to tell me I did something wrong. It was more like, okay, somebody further higher up decided they rather wanted me in this case, to go than the person that my boss had chosen. And that he wanted to know, okay, I can't give you a whole lot of time. You kind of need to decide you want to go or not want to go. And so I called my wife, but we were pretty much both almost instantaneously, yes, we want to go. So here we had this kind of almost finished renovated house and realized we wouldn't be able to live there, but it was kind of hard to say, well, should we sell it? And we thought, well, maybe we can rent it. Did that for a very short period of time, but it didn't work out very well. And so that's why I'm saying it wasn't really a bug. Then did the exchange program. The whole thing was in a nutshell about 6 years. And when I then retired from the Air Force and we were in the US and decided to stay, got a job offer, got a green card, all that kind of stuff, the question became, what can I do in addition to the military to basically build some retirement income? And that was right around the time that the dot-com bubble had burst. So stock investment really didn't seem to be a good thing. And I started looking in real estate. And even though we had this kind of, wasn't really bad, but it wasn't good either, experience before, and some others, I was still convinced this is something for the long term, and that's how it got started.
Yeah, and that's really interesting because it sounds like when you got started is more because of a circumstance rather
Mhm.
than, careful planning. I think a lot of people today are, wanting to get into real estate because they're seeing, a lot of information out there. And so when you first got started, it was more so the circumstances were right and you kind of just took it, step by step along the way. Is that correct?
Right, that's correct. And the other part is, when you have a situation like I described with that first house in Germany, and then we had something else going on with a house in New Mexico where we were stationed with the Air Force, it made it clear to me, and I think this is a fundamental lesson, that regardless what people decide to get into, or even if you say what they want to invest into, is you should spend considerable amount of time to really get a thorough understanding how that particular area that you decide to or want to decide or kind of feel like it's the right area for you to invest in or get into, even for your job. You need to really spend a bit of time to research it, right? And the first couple of real estate things that we did, we just thought, well, it looks like everybody can do it. It's not a big deal. And it showed that we had no experience, not really a good clue of what's going on. And so when I then took it more seriously, we started really researching. I, bought courses like initially on cassettes and then DVDs and then online and so forth, and read a lot of books. And then all the stuff started to make sense. And it also indicated what to be aware of, what to stay away from, and so forth, right?
Yeah, absolutely. So I think that's the case for a lot of people who are first starting out, right? They're just very excited And in the beginning of, I think, any new venture, the excitement is at the highest, but the education level is at the lowest, right? And that can create a dangerous, I guess, a dangerous situation there.
Yeah, and it can also mislead you because, when you take terms like when you say real estate investing, right? Or if you take as an alternative in the investing world, stock investing. The reality is, as soon as you start educating yourself a little bit, you find out, well, within real estate investing, there's all kinds. There's syndications, there's tokenized, there's residential, there's commercial, there is residential commercial, there is, within commercial, there is storage units and trailer parks and office buildings. And, in each one of those, you can spend your whole career just picking one of the ones I just read it down and say, that's my area within real estate. And that's the one that I'm going to go into. So that was an important thing for me to say, okay, what am I going to really focus on? What is the model, the strategy, all the things that you ultimately want to have and then stick to, right? And so that's an important lesson to learn, is to say, just like any other thing, don't go by the label, really try to figure out what part underneath that is the one that you want to really dedicate yourself to.
Right, absolutely. So I think a lot of people out there, when they're first starting out in investing, I think the one they think about is probably residential investing, and it sounds like that was kind of where you got started as well. Was it's just residential investing? So would you say that's a, I guess, would you say that's a good way to for professionals to just get started, just because it's potentially lower risk and there's less things to manage as compared to maybe some of the more complicated, as you get into more commercial real estate, different things start showing up.
Yes, but not necessarily for those points or reasons that you just mentioned, Kobe. I think you want to ask yourself, for any of the different niches, why do you want to be in it? Right? Like, so if we talk about residential real estate, and for the audience, just as a definition, is considered anything from a single family to anything that has like 4 doors or 4 units, like a fourplex or so, and everything in between. And to me, one of the reasons to say, why do I want to be in that particular area, is because if you really think about it, that is the largest market, right? Because it's not just for people like us who want to invest in it, but it's also for anybody else who wants to own a house or a duplex or stuff like that, to live in it themselves, right? So if you ever say, okay, I have, for whatever reason, a need to sell, I have the largest market of potential in front of me. The other thing is, initially, like you said, when you think about how can I educate myself, how can I be competitive, both on knowledge, but also financially, when you compare, how is it if I want to buy a property, like just a regular single family home, compared to investing in it, almost all the rules are the same. There are a few that give an advantage to the investor, but fundamentally, those rules are the same. So if you just switch for just one little thought experiment for our audience, to say, instead of buying a single family home, I'm jumping right into a 10-unit apartment complex, which by any measure would be considered small, almost tiny. Right? Most people say, well, real apartment units are like 50, 100, 200, something like that, right? But let's say 10, because that falls already in the category of commercial residential. So now you're not competing anymore with people that would potentially want to buy it for themselves, and everything changes. The way the calculation for value is done, you suddenly need to know stuff about rent roll. You have completely different organizations that are providing the funding for the whole thing. You need professional management and all kinds of other rules that most people, at least in the beginning, are not even remotely familiar with. So as a novice, you are basically competing with people who have potentially done it for years or decades. And guess what? It is very likely that you get into a deal for either way too much money, or it looked good on paper, you don't have enough experience, and then later you find out that it has all kinds of problems, right? And you might wonder, why did I, as a newbie, get this, and the professionals let me have it? Well, most of the time there are some reasons: either the money is too expensive, or the place is really not nearly as good, or it has a lot of issues, or it's in a bad neighborhood, and on and on and on, right? So when it comes to how can you yourself judge something, you can in the residential field, especially when you start out with single family, you can use all your experience from all the time in your life when you didn't live at home anymore to see, okay, how was that? Right? But when somebody lived in an apartment complex does not mean you have any idea how to buy, own, manage, or invest in an apartment complex.
Right.
Just as an
Absolutely.
example. So, that's part of the reason. It's one thing to say, I pick a certain category, but you also want to have good reasons.
Yeah, absolutely. And I think that's a reason that I don't think a lot of people think about, or at least one that I haven't heard too much of, which is because most people who are out there investing are very, at least as far as mainstream information goes, investing in the single family homes, right? 1 to 4, the process and being able to understand how to analyze it, right? Getting the financing, right? The money side, they're all very familiar with that as far as that's just a regular process to purchase a house for most people. But buying up, like you said, even a 10-unit apartment building, which is definitely considered small, when it comes to actual apartment investors, yeah, everything changes, right? You're getting your money from a different place. The analysis is completely different. You're looking at something completely different as far as what is determining the cost of the property. And like you said, professional management, right? A lot of landlords, I think, either self-manage or maybe they have, a friend or a family member kind of helping them with that. But when you get to apartment buildings, you have to actually have a professional manager, take care of that, or you're going to burn out. You don't know what to do. So they're all great reasons to kind of consider, why you want to start in one asset class in real estate instead of another one and be able to move up. And I guess that's the other part of it is if somebody is investing in, single family rentals and they're getting really good at it, maybe they've built up a nice size portfolio and they do want to scale up, from switching from investing in maybe single family to a different asset class, or maybe just from one to another, what are some, I think, things to look out for as far as mistakes you could be making? Because at that time, again, you might feel a little bit more confident, but like you said, it's two different things, it's two different niches. So there are a lot of differences. So what are some things, I guess, important things to look out for when you're making that transition if you do want to scale up?
Yeah, there are a few things I believe that are really important. First and foremost, I would say is, are you looking at this activity, anything that has to do with the investment, as something that you need to or want to spend a significant amount of time on? Or is it really more like we said when we started, something where you make an investment with the goal of having passive income and maybe spend an hour or two a month just to check how it's going, right? So that's a huge thing, because if you say, okay, I want to find a small or medium-sized apartment complex close to where I live, then if you really want to manage it or be really involved, then it's not just a couple hours a month, right? So that fundamental thing, is this an investment for me that I want to keep as passive as possible, or is this an involvement, or you can call it like a second job or something like that? For the vast majority of people that I work with, they want to invest money, but not necessarily a whole lot of time, right? So that's one distinction. The other one is the time horizon you give yourself to say, when do I really, from now that I made the decision I want to get into real estate with my money, one way or another, when do you want to actually be able to spend or invest X amount of money for investing? Now, in single family real estate, residential real estate, like what we do with the vast majority of our clients, and I help them out to how to get there, we are pretty successful to get them to the first time investing, assuming that they have a certain amount of money to invest, within about 6 months. Now, if you take that to like an apartment complex, you probably need 6 months just to even search the area to find out what's out for sale and how does this work. Now, if someone, to your question, says, I still want to rather go into that than into the traditional residential, my recommendation is, for one, give yourself a longer time horizon. Say, okay, I'm not expecting to make any contribution, any investment of my own money before at least a year is gone. And the other important step in that, like I said, even for the single family residential, I invite clients who want to do this into my mentoring program. And the same, in a sense, should apply for other areas within real estate. But the bigger the deals get, like even a 10-unit apartment complex is probably several $1 million. And the bigger it gets, the more millions it gets. So you probably should always aim to work basically like an apprentice under somebody or with somebody who already has a lot of experience. And in that capacity, you might not even need to or want to be the actual investor or one of the investors. You might want to ask somebody that is doing regular apartment investing or like commercial residential real estate investing. Can I basically provide time to learn from you, and whatever you need to get done, I spend my time on it. And in the process of spending my time, I'm learning and you mentoring me in that way. And you may have to pay some for it or not, but not having the expectation that you will actually make an investment based on that first or second deal that you go through with somebody else who has the experience. So what I'm finding is most people, unless they want to make it part of their career or their exclusive career, most people want to invest. And so when you take that into consideration, it feels like a long time when I say, let's aim to get the first house purchase in 6 months. Because if you compare that to pretty much any other investment category, if you say, I invest in precious metals, you can buy the coins tomorrow. If you want to invest in stocks, you can open a stock account at, Charles Schwab or Fidelity or any of these brokerage companies. And basically, as soon as the account is there and you put some money in it, boom, you can go and buy stocks and trade them back and forth every day. So 6 months feels already long. Most people in this kind of, I call it the instant gratification age that we're living in, have a hard time waiting for something they want to do to have to wait 6 months or even longer, right? So it's important to realize and ask yourself, how patient can I be? How much do I really willing to learn before I'm confident enough to invest? And you start probably getting, when you take all those things into consideration, it gets more and more obvious that the regular residential is, even though it sounds kind of crazy, but it's the quickest way to invest.
Right. Absolutely. And I think you bring up a really good point, which is a lot of people want to invest, right, like their money, but not necessarily be involved in the process, right? They're really busy. Maybe they're professional, right? A lot of our listeners are real estate agents, right? They're going out there, they still have to run their sales business and they don't necessarily want to spend the time investing, or at least managing their investments. So and you bring up that there's a way to do it where you're not necessarily spending so much time, but I think a lot of people, when they're listening to different podcasts or reading different books on investing, it does make it sound like an entire separate career, and that kind of defeats the purpose of the passive income. So in your opinion, what are some ways that people can start investing, right? Maybe they have some money, but they don't necessarily want to spend a ton of time just making it like a separate business or maybe even like a part-time job that I see a lot of investors out there doing.
Yeah, well, real quick for your real estate agent or wholesaler community of listeners, I would assume the vast majority work for some sort of brokerage, right? Like, I mean,
Right.
Century 21 or Coldwell Banker or whatever, Berkshire Hathaway, all these different brokerages out there. So I wouldn't say that is really your business, because I want to make the distinction. I am a big proponent to create your own business, like the Kobe Singh Empire LLC or something like that, for the purpose of your investing, especially in real estate. So, if you're working for a brokerage, then that would be your own business, so to speak. But the other part and more important part is, if I were to put myself in the shoes of a successful real estate agent, right, then I would say, where would I want to be? And I've been fortunate, with my family, to live in some of those areas, right? We spent about 10 plus years in the Santa Barbara area. And yes, there's a lot of competition with real estate agents, but then, you know, the average price is between 750 and upwards multi-million in residential. So you didn't need a whole lot of deals per year to actually make a really good income. So that's great from that perspective for commission, but it sucks, sorry for my French, from an investing perspective. So what we do is we basically developed a strategy that we call the out-of-state residential real estate investing strategy using turnkey providers. And what that means is, let's say I were or you were an agent in Santa Barbara or San Diego, LA, anywhere up the West Coast or even East Coast, you know, New York or Boston or something, Cambridge or something like that. So you know the place where you live and where you make your money is very expensive. So now we go out of state to places like Ohio, Florida, Alabama, Kansas, those places in the Midwest, where the same house that on the East Coast or West Coast costs like $500, $700, $900,000 costs maybe $150,000 or $200,000. Because why do we do this? Because we want to have performance. And most people, when they listen to investing, especially in real estate, they kind of compare it in a sense a little bit to stocks, right? Where you say, I buy a house and now I want to see how quickly it's going to grow in value. Well, that's nice, but it doesn't do anything for your passive income, right? Because then you would only realize any kind of gain after you sell it again, which is true for stocks, but shouldn't be true for real estate, especially because the government is actually helping you massively if you keep it. So what we want to do when we talk about performance is to say, okay, let's find a $175,000 house, 3-bedroom, 2 baths with a nice little garden. And we want to find a place where the rent is, let's say, between $1,650 and $1,800. And if you were anywhere on the West Coast, East Coast, or in bigger metropolitan areas, you would say, wow, I can get a house and pay 16, 17, 1,800 for rent. Yeah, you can. Right, so that ratio is good performance, which will definitely provide you with passive income. And why do we then use turnkey providers? Well, because turnkey providers is a special kind of real estate company that finds what I call the ugly duckling in a good neighborhood, buy it as cheap as possible, then renovate it. So let's say they buy it for 100 and they put 50,000 into it. So now it's 150 on their cost, and then they sell it to me and you for 180. So they make 30,000 on the renovation. But then they're also, and that's the important part, the ones we work with, they're also going to manage it after we buy it from them. Right? Because of that, they obviously know what they did during the renovation. If something that they renovated doesn't work, guess who we call? The same people who just renovated it 6 months before, a year before. Right. So obviously they have an incentive to do the renovation the right way, so they don't have to fix their own stuff. And we buy it, yes, for maybe a little more than you would buy it from a flipper. But on the other hand, it's very passive, right? They found it, renovated it, sold it, manage it. All we need to do, this is like I mentioned, once a month for maybe 30 minutes to an hour, have a call and say, how's it doing? And the last thing I want to say about this is when you go out of state into these Midwestern states, find these well-performing properties, is that I'm a big fan and help my mentoring clients to build what I call clusters. Instead of having one house here and one house here and one house there and so forth, we try to build clusters of 4 or 5 houses with one turnkey provider. Now you also become a preferred client. If you, Kobe, had 5 houses in Columbus and Ohio with the same property manager and they have 200 others who all have one house, you are the big fish in that pond because you have 4 or 5 houses and get treated accordingly. Now, when you're part of our tribe and we have 5 Kobe's and they all have 5 houses, we get even treated better, right? So,
Right.
but the principle is for you yourself, for your 5 houses, if one house takes maybe 20 to 30 minute call, for all 5, the call is maybe an hour at the most once a month. You make the passive income, you have a call 1 hour once a month with your property management. And as your portfolio and your clusters grow, like in my case, I have 3 property managers, so I have maybe 3 hours a month. Well, I would call that pretty passive.
Yeah, 3 hours a month. That's not bad at all. So
Right, yeah.
yeah.
Right. So that's a little bit of how did we develop that strategy, because my family and I, we lived in expensive areas, which is good for real estate agents, which I'm not, but if anybody is, work and live in the expensive areas and invest in the well-performing areas.
Oh, absolutely. So on the turnkey providers, right? So this is I've heard about these certain similar companies out there, but this is the first time I've actually heard it broken down like this, where basically the turnkey provider company is almost acting like a flipper, right? Where they're buying the house and then they're renovating it, and then they're essentially selling it back to you, the investor, and they're actually going to manage it for you. So in working with these turnkey providers, right? How are you finding these companies? What are some things to look for? What does that process kind of look like just from a like a one-on-one breakdown viewpoint?
Yeah, I mean, the first thing is, I mean, if you had a business, you wanted to start a business, any kind of business, I always feel it's important to see what are all the potential income streams. Right? If we go back for a second to what you said, a lot of your audience is real estate agents, while they have an income stream if they sell houses. Right? So
Right.
if you are a turnkey provider, you have an income stream from renovating the house because you make a profit on that. You have an income stream from managing the property, and you potentially have an income stream if you do it right because you run your own management of the renovation team and the maintenance team, which means you can have a little profit on that too. Right? If you think about it, like doing the renovation, if you have your own crew doing the renovation, then you pay them wages. You don't need to get a plumber and an electrician and pay basically other people's wages. So there are at least these three income streams. And what happens oftentimes is that turnkey providers as an organization also own a bunch of properties on their own, right? Because obviously they can constantly add to their own portfolio while they're also working for investors. So long story short, they have built a business with multiple income streams within a certain community. And if you do it right, you can develop a reputation of the houses that you renovated and that you've been managed for owners are maybe a little better than the average flipper house, at least in the long run. Or there are no fights because there's only the owner and management. There's nobody else, right? If your audience listens, says, okay, how is this different with the flipper? Well, if a flipper sells a house and something breaks, and obviously if it's far away from where we live, then we have to hire property management. If it breaks something like 6 months, 7 months, 8 months after I bought it or you bought it, Kobe, well, what do? We go and say, okay, property management just called me and said there's a $600 repair. We said, well, that can't be. This thing has just been renovated 6 months ago. Go to the people that renovated it. They said, no, when we gave it to you, it was all fine. It's not our fault. Well, where do you go as the owner? I can tell you from my own experience in the end, most of the time you end up paying out of pocket because you can't really figure out between this triangle between owner, property manager, and flipper, who is really at fault. And ultimately, because you need to keep your tenants happy if you want to do a business right, you end up paying for it. Well, it's totally different with the turnkey provider because they bought it, renovated it, and manage it. So like I said earlier, it's in their very best interest. And especially when you start building a cluster or you're represented by a larger community like ours, you have more pull. Now, when it comes to finding, I always say the biggest, most important criteria for finding turnkey providers, and you don't really need lots. I mean, in our case, when somebody becomes a client with me, they don't need to find any, they just use the ones we have. But if I were to have to go out and find a new one, the first thing you want to do is to say, okay, what location in the country can I find that currently has well-performing properties? Meaning like price and rent level that ratio. So if you have identified that location, now you go and say, okay, are there turnkey providers in this location? Let's say the answer is yes, maybe more than one. Then you want to actually have them kind of pitch to you why you should work with them. And the things you want to look for is what is the average price for the properties that they are purchasing? How much money do they put into the renovation? And here's an important criteria in that is show me the statement of work of the things that you typically address in renovation. Right? If they say we put golden faucets and 3-inch thick hardwood floors and granite countertops and all kinds of other stuff, you know already, assuming that we're true that anybody did that, that the renovation is probably too expensive making the house ultimately too expensive to have a good ratio. A regular renovation would take it maybe from 150 to 200 and you get 1900 rent. If you have a crazy renovation, it goes from 150 to 250, you still only get 2000 rent because the rent is dependent on the neighborhood, on the area, right? It's not just because the house is a little nicer, the tenant is going to pay you like 20% more rent. A little more maybe, but not that much, right? So that's what you want to find. And then, you want to also then, let's assume you find out, okay, they have a good statement of work, they have a good average, they have a reasonable approach to how they do it. Then you want to take the other two criteria, and that is how many properties do they have under management? And what is the average time that the tenants stay within these properties? Because if you take a look at that, that's just regular property management, right? A good property manager has properties that tenants like to live in and they don't leave every 6, 12, 18 months. So when you take all those criteria together, you can say that's a good way to find a good new turnkey provider. If any of that is not there, then you just have to move on to the next one, And if you're really convinced about a location, then it's just a matter of, can I find one? And the hardest thing to do is to move away from what seems to be a great location when you can't find a good provider.
Right. So that's really interesting. Working with turnkey providers, that's something that I think a lot of people um, will be intrigued by as far as investing goes, because it does sound like a really good partnership for an investor that doesn't want to, necessarily do all the work up front or want to just be involved in, having a second business kind of on the side or another business that they have to run. So this is really interesting. And we've been talking a little bit about kind of investing out of your area, right, out of state and out of the city. So I know we talked in the beginning about investing in other countries, and obviously when you first started, your first property was in Germany. So and I know a lot of people want to invest in countries outside of the United States, right? Maybe because of certain reasons, as far as better rents, better ways to just kind of diversify their portfolio, even just having a property in a country that they travel to a lot, just to have it there. So as far as investing in other countries, right? What are some things people should look out for? How should they kind of get started when it comes to maybe picking a country to invest in? Or what are some things that are going to be different as far as, investing in the States and keeping rental properties here in the States, versus keeping one that's, not in a different country, not here in the United States?
Yeah, an overarching thing I would say as a response is you really want to ask yourself, what is the purpose of the investment, right? So for example, you mentioned a few of those. One purpose could be to say, okay, maybe there could be a situation or a scenario where the political and legal system in the United States gets to a point that I personally find it too oppressive. I don't want to live here anymore. Because keep in mind, even if, like in my case, if you build a large enough real estate portfolio so that it pays you enough passive income so you don't really have to work anymore, when you do it like we do with turnkey providers, you can basically be anywhere on the planet, right? Because your properties are there, your turnkey providers are working for you. So you might say, okay, one reason or purpose is I want to have an alternative, another place to go to if for whatever reason, however likely or unlikely it might be, I just don't like to live here anymore. Now, one thing, I mean, we're doing this, people see this in the background. I'm currently in Spain. One of the reasons could be to say, okay, I'm living in these nice areas in California, but cost of living is running away, right? It's growing so quickly, not just at the inflation rate, but in certain parts of the country, it's running so quickly away that I might, even with my portfolio, never be able to retire. So where can I find a place that has many of these same attributes, like the ocean and the weather and so forth, but the cost of living is half, right? So that could be a purpose to say, okay, I just want to live somewhere in the future. It doesn't have to be right away, but sometime in the future where with my passive income, we call that our time freedom number. How much per month does the passive income have to be? if you say, okay, I live in San Diego and right now I'm getting $5,000, well, you can probably not live off $5,000 in San Diego and have a happy life. But if you go in a Mediterranean country in Europe with $5,000, you have a very pretty life, right? So cost of living can be an important thing. Safety, you know, like coming originally from Europe, as I have to say, it's always been in the back of my mind. And I want to be honest, there has never really been an incident, but constantly hearing all kinds of situations where people get shot is scary. And it can get to a level of scary where people say, I just don't want to get even in the vicinity anymore. So that could be a personal safety. Now, if you combine that with investing, then the purpose also gets a time horizon attached. You might say, okay, I have my job, I have my house, I like the location where I am, I'm raising my family. But in 10 years, I'm thinking I could get my time freedom number. I could have my portfolio built, or 10 to 12 to 15 years from now. And then I want to have the freedom to be wherever I want to be, or at least have the choice. Well, then you could now make one of your investments already, because there's an old saying, I'm going to ask you it in a question form, you can say if you know it or not, is when is the best time to invest in residential real estate?
5 years ago, 20 years ago.
Many years ago, exactly, 20 or 15 years ago, right? So if you flip that around and say, okay, well, if you say, I want to live off my passive income, let's just say 10 years ago, you used that as an example, right? Well, that's flipped around would mean if I get one of those properties in a nice location with low cost of living now, then by the time I'm actually going to change my lifestyle, I already have it. And you will look back and say, wow, can you believe it? I bought that thing for 100,000 or 150,000. Now it's double, or it's significantly more expensive. How glad would you be to have bought it then? And you can ask anybody in residential real estate in all the desirable places in the world, they will always say, I wish I would have bought it 20 years ago. Everybody. And it's true, by the way, in the US too. If you go like anywhere in Florida or the nice locations and up and down the coast, everybody tells you, I wish I would have bought it 10 years ago. So if you think about it that way, now the important part that comes with that to remember is, as an investment where you say, I can see one of the purposes for me to use it in the future myself, then it's important to see, can you in the meantime use it for either long-term or short-term rental? And I can tell you that the vast majority of places in the world that I'm aware of where people would potentially want to buy something, long-term rental typically doesn't work. Especially because we are somewhat familiar, and I mentioned the whole property management stuff and so forth that you know from the US or maybe in Germany or stuff. But a lot of places in the world don't have that to the same level. And especially when property management knows that the owner is probably never really going to show up, or maybe once a year for a week, you get a certain treatment that way. It's very different if you say, no, I find a place that I would see myself living in 10, 12, 15 years from now, and I can now give it to a short-term rental. Because that opens up the door to everything that comes under the name of tourism. Right, and it's not just tourism, it could be other things, business travel and so forth too. But the point is, there are many, and we all know of these organizations who organize vacations. And I can tell you as a European, the level of organization of vacations in the United States is, and I don't want to offend anybody, but it's laughable to what most other people in the world are used to. When you're somewhere in Asia or you're somewhere in Europe and you book a vacation, that means you book everything. You book the transport as part of it, the hotel or the short-term rental or the house or the condo that is part of it, the rental car is part of it, the food is part of it. Everything is part of that package, right? So then you're not really looking anymore at just the traditional property management like you would, as we discussed earlier. Basically, your property management, in a sense, is a vacation company, right? And they obviously take your quote unquote inventory, meaning like your apartment or your tiny home or your single family home or condo or whatever you bought in any of those locations, as part of their portfolio and offer it to these organizations that put these packages together. So they have a high interest themselves to get it rented as much as possible. And yes, in a short-term rental world, you're paying 20, 25, even sometimes up to 30% of the income in management fees. But if you think about people take 1 or 2 week vacation, every 2 weeks, the place gets completely cleaned. Everything gets changed, new sheets, the whole furniture gets cleaned, the floors get cleaned. Every year or two, it gets all painted and stuff. So they do much more. They do all the marketing and advertising. It's not the same like some tenant moving in, and as long as they don't have a problem, there's nothing to do, right? It's very different. But you can literally have a 10 or 12-year time horizon and pay off that investment before you ever start using it yourself, right? Because the income, even with 25% property management fee, is typically higher than it would be for a long-term rent. Now it's also
Right.
more seasonal and all those kind of things. But then again, you go into locations that are desirable for the purpose we discussed. It's not the same price like New York, right? Like you can buy, like here in Spain where I'm right now, you can easily buy a nice condo with about 1,000 square feet for probably between $100,000 and $150,000, right? And then if you calculate how much would it take to get that paid off in 15 years, it's not that hard to do.
Right.
Right, especially in light of the fact, if you think about it, in the summer season, people for a nice condo with like 3 or 4 bedrooms, they pay like $300, $400, $500 a week. Right now,
Yeah.
it's not a whole year, so you can't just say, okay, 52 weeks, that's like an insane amount of money. But through the summer, that's typical what is being paid, right? And so you make all the money you need in 4 or 5 months. Those kind of things with a reasonable entry price. Good management in a desirable location. Why is it desirable? Because you like to go there yourself.
Right.
Now, when we're talking about our turnkey investments in the Midwest, in the vast majority of cases, we would never ourselves live in those houses. But for those international investments, I'm working with a friend of mine right now for an investment opportunity in Northern Cyprus. And I would say, what do you know about Northern Cyprus, Kobe?
I heard it's beautiful.
Yeah, it's beautiful. Anything else?
Uh, Nothing else in particular. So,
Yeah.
is there anything?
Well, the thing that most people aren't even realizing, yes, they can look at the map and say there's the island of Cyprus. What most people don't realize is it has a line in the middle. One is Southern Cyprus, the other one is Northern Cyprus. Southern Cyprus is what's called the Turkish part, and it's part of, it's a Greek part and it's part of the European Union. And the northern part used to be Turkish, but it became independent. So it's its own country. It's not part of the EU. It used to be colonized by British. So they're using pounds and crypto to pay for everything. And it's very ecological, right? So now you can say, okay, so the one is EU and all the rules apply. I go like 2 kilometers or a mile and a half north, still on the same island, and I can do an investment that is basically in an independent country. That could also be interesting if you say, I am planning to become rich and I don't want anybody to be able to take my money away from me, right? Stuff like that. So purpose, we come always back to purpose, can be an important indicator. So yeah, we are working on that right now. Beautiful brand new built condos in Northern Cyprus, as an investment opportunity. And they be fully managed, like we just said, until you say, okay, now I'm ready. Now I want to live there myself. And then you can move in basically.
Wow, I had no idea about that Northern Cyprus. So that's actually really interesting because there are a lot of people who are specifically looking for places that offer those traits, right? Offer, that
Yeah,
independence,
exactly.
almost
Yeah,
off grid.
it goes even as far as saying, okay, to pick a place that has a very good program. It's called a Golden Visa program, where you can, through a certain amount of investment, if you invest a pretty substantial amount of money, you can get basically a Golden Visa or kind of like a green card right away. Or you can say, okay, with Northern Cyprus, you invest your investment, you have it managed locally by a local company, and after a certain number of years, you gain permanent residence. Right? And you could even theoretically try to apply for citizenship, but that's typically not necessary, right? Some people say, I want to have more than one passport. And if you want that, there are places in the Caribbean, that offer you, for a certain real estate investment, you can get a passport kind of coming together with the money that you invest. So purpose is when you think international stuff, like I have, for example, besides this Northern Cyprus thing, years and years ago, I wanted to diversify from anything that has to do with housing. And so we made investments in Panama and Belize in agricultural real estate, literally buying parts of a farm that grows cacao and coffee. Now that's a long-term investment, but it's pretty cool because you plant these trees and then they produce for 20 years. And yes, initially you don't make much out of your investment, but if you hold long-term, then every year it's going to pay you when the harvest is done.
Right. Yeah, that's actually a really good point. Just knowing your purpose, right? Why are
Yeah.
you investing? What do you want out of it as a result? And a lot of people will say passive income. And that's why I think today's interview was actually really helpful because it's a different perspective than I think what a lot of people hear, which is more so a lot of the more popular real estate kind of educators out there are more talking about how to, build a business rather than just use the money that you have maybe from a career or a different business to invest in real estate and not necessarily be involved in it, but and make the passive income from it.
Yeah, exactly. Well, and the beauty is if you stay in the residential world, that the amount of money that you actually invest yourself is the smallest part.
Hmm.
I mean, you show me any other investment, like if you go back to the US with our TurnKey in the Midwest investment, where you find, let's say, that $150,000 house, single family house, 1,000 square feet or so, that you only have to put down $30,000. The bank is paying the $120,000. That's typically like 80-20. So your part is 1/5. But, and these are some of the cool things, and your real estate agents audience knows this to some extent. If the house appreciates by 5%, right, that would be $7,500 on my $30,000. That's more than 20% on the money I put in. Because the crazy thing is you are allowed to keep 100% of the profit, even though you only put 20% of the money in. Right, so that's one way. Then you can also keep the profit from the difference between the rent and your cost for mortgage insurance and property tax and so forth. So that's the next thing. Then that thing is being treated like a machine. So you have depreciation for 27 and a half years. So that's about $3,000 per year that you can write off on your taxes. And it goes on and on. If you don't like it anymore for whatever reason and you find another one, you 1031 exchange it and don't pay capital gains tax on the appreciation. I mean, if you add it all together, show me any asset class that can compete. There's just none. Even if you say, oh yeah, my thing only appreciated 3% every year. It gets to crazy numbers really quickly.
Right. Absolutely. Well, Axel, I want to thank you again for being on the show. I think we had a really good conversation here, and I learned a lot, and I think our listeners learned a lot as well. So for anybody who is watching or listening to this that want to learn more about what you do, maybe they want to work with, under your mentorship and your program as well. What are some of the best ways for people to either reach out to you or find you on social media or maybe your website or anything that you're kind of doing out there that you want people to maybe follow you on?
Yeah, exactly. Well, thank you for offering that. So the easiest is you can either put 3 words in any kind of search, like ideal
Mhm.
wealth grower, or you put them all together and add .com to it, and you get to the website. And just within about a minute or two, we offer you free calls and free newsletter and all kinds of things to engage. And the main point is from our conversation, if somebody says, I like to have the opportunity to do these investments, have the passive performance, but I need somebody who holds my hand and gives me access to all this, all these relationships, all this network of turnkey providers, insurance, lenders, and so forth. That's what we do. The mentoring is basically holding your hand through the process until you have built a portfolio that it can sustain you.
Right. Awesome. So we'll make sure to leave that in the description and the show notes down below so people can find that. But other than that, Axel, was there any just last tips, last nuggets that you want to leave with us before we let you sign off?
I want to say, especially for real estate agents, don't wait, don't overanalyze, just get help. If it's not me, somebody else who is educated, and get started. Because like we said, both you, Kobe, and I said the best time was 20 years ago. The second best time is right now.
Right. Absolutely. Well, thank you again, Axel, for being on the show. Really appreciate you. And I want to thank you for tuning in, and I'll see you guys on the next show. Take care.
Thank you.